Hello, greetings. My name is Patrick Tan, the General Counsel for ChainArgos. We're the blockchain intelligence firm that was made famous for outing Binance's $1.4 billion BUSD under collateralization. Thank you for joining us today. With me, as usual, is my CEO and Chief Data Scientist, Jonathan Reiter. What do we have for you this week? Thank you for tuning in. It's Friday.
Why are you speaking like that? Okay, anyway.
Anyway, on this episode, we're going to speak about Gemini Earn and their settlement with the SEC, Terraform Labs and their bankruptcy filing, as well as Tether's record profits. Thank you for all the likes and subscribes, as well as your comments. We appreciate that very much. Thank you for taking the time out of your precious schedules to tune into the show. If you're tuning in to us from Spotify, thank you for listening. Well, John, what do you have for us about the Gemini Earn
In
settlement?
addition to us apparently being a low-quality BBC spoof. All right, so it's actually Genesis reached a settlement with the SEC regarding the Gemini Earn program charges, whatever. So Gemini Earn blew up in the end of 2 years ago, right? The end of 2022.
That's
right?
correct.
And then they filed December or something. And they were, I believe, Genesis and everybody got charged in the end many times, whatever. So right before the actual bankruptcy filings, the SEC charged them with unregistered securities stuff. So they have settled for $20-something million, usual, without admitting, denying whatever wrongdoing. Given that they're in bankruptcy, it feels unlikely that they'll be emerging from bankruptcy and engaging in unregistered or registered securities trading again anyway. And the fine is set to be paid after the customer recoveries. Customer recoveries are already significantly impaired. This only relates to the Gemini Earn program.
Okay, so let's talk a little bit about that.
And the SEC charges. Yeah.
That's right. So typically in usual cases like that, you would expect the government to take its share first, and then.
Well, I mean, okay, so the standard sort of remedy for unregistered securities trading is that you have to offer to buy them back at the purchase price from the people you sold them to.
We've seen that on many crypto
I mean,
cases in the early days during the Trump administration.
Penny stocks and whatever, forever. That's the standard thing. And the issue here, of course, is that Gemini Earn returning people their money is essentially, I mean, the deposits or the investment. So it would essentially be buying back the securities.
Yes.
Right? So forcing them to pay their customers back the money they deposited with them. So there's a difference between selling you a product, security, unregistered security, registered, whatever, that's supposed to be like a share in something and the price goes up by a factor of 10 or 20, and taking a deposit and paying you a few percent interest per year. If I take a deposit even at 10% annual interest and I only have it for a couple of weeks, I essentially owe you what you gave me. Right? So forcing someone to buy back a deposit as an unregistered security is just forcing them to give them their money back, which is what they're trying and unable to do in the first place. Generally, people are forced to offer to do that, and they also get fined. So if you're an existing business and you do some unregistered security stuff on the side, you can still pay all kinds of things because you have a functioning business. This business has exploded. Many of these companies have exploded businesses, and it's sort of a somewhat different kind of arrangement. So sorry, the government has the right to be paid first. They're choosing not to here.
Which is reasonable considering that it's bad enough for most of the the Genesis Earn customers. Oh, sorry, Gemini Earn customers.
Well, you mean the customers? I mean, okay, so these people are already suffering losses. Fair enough.
So let's go back a little bit just to put everybody in context, because not everybody can recall what that was all about. Maybe just TLDR.
So Gemini was a crypto exchange run by the Winklevoss twins, and one of the programs it provided was a thing called Earn, where they would pay you interest on your crypto, and most of the program turned out to be collecting. This is before ETH was on proof of stake or any of that, right? So Bitcoin tokens, Ethereum tokens in the old days, pre-proof of stake, stable coins. None of these things have any inherent yield generating options. You can have a discussion about if proof of stake tokens generate yield, but Bitcoin does not. So they were getting yield from somewhere, and what they did is they deposited them with Genesis, which said they would loan them to other people. Turns out a lot of the time that wasn't really happening. Whatever, and they would pay interest on stable coins. So Gemini was offering 4% when the bank pays you 0. This is back when deposit rates were 0, 2020, 2021, that era. So that program eventually exploded, at least in part because Genesis lost all of its money loaning it to Three Arrows Capital and other whatever exploded trading firms. And then, as is the way this works, long after they were clearly unable to pay people back, the government sued them for unregistered securities and a variety of other things. The state of New York's pursuing these guys for fraud and all sorts of stuff. Then they filed for bankruptcy. This is a theme that we'll come back to with a different company shortly. And they've now settled, I guess, the first of the actions they're presumably going to be settling. When you owe a whole bunch of retail investors in aggregate something like $900 million, you're not in a great position to fight the government forever. So they've settled this one. The fines will be paid only after customers get full recovery, which they will not.
Which they will not. Yeah, we talked about this on earlier episodes where there's no way. I mean, this is...
I mean, I'm sort of publicly on record having a problem with this to some extent. So for me, the weirdness is if I set up a business and I tell you I found a loophole where I don't have to have a compliance department and I'm going to pass the yield to you. Celsius explicitly said they would pay you extra yield because they didn't have to follow all these rules because they had a magical way to do it. The people who are receiving that yield are in some sense in on it and are not entitled to priority over the government on the fines for not having a compliance department in the first place. You can argue that if you just go to a bank or you buy stock on a stock exchange or whatever it is, and it turns out they were doing something crazy, you had nothing to do with it. If their business model is we don't have to follow the rules because we found a magic loophole, that is not the same. People will say the Gemini earned depositors, like the Celsius depositors, believe the rules were all being followed and the rest of it. To some extent, I guess it's kind of okay, but if your pitch is we can pay you 4% interest when the bank and government bonds pay you 0, on some level people have to take responsibility for that. So these guys are already getting nowhere near full recovery. So whether their recovery is 20 versus 25% or something as a result of the fine, okay. It's the prosecutor's choice to do this. But this is going to keep coming up.
And ironically, if you look at the FTX recovery rates, it seems like the FTX recovery rates are like, you know.
Yeah, but FTX has done an interesting thing, which is whittle down the customer list as far as possible and pay whoever's left 100%.
Yeah.
So because Gemini did take people's names and IDs and that kind of stuff, they're not able to just delete such a large fraction of the liabilities as FTX was.
Yeah.
I mean, famously, a lot of Madoff customers never came forward because presumably they were people who didn't really want to have a conversation with the government.
We see that from time to time with a lot of these things where, you know, the people just don't come forward with the claims because then they get nailed for something else.
Yeah.
Almost always the case. All right. So moving on from one bankruptcy to another, this space seems to have no shortage of these things. Terraform Labs.
Yeah. So Terraform Labs is filed for bankruptcy, and it's a fascinating read. People should read this filing. We can put the link, or you can find the filing, whatever. So they're saying that they're, I guess, expecting in the near future to be fined by the government an amount of money they can't pay, which will then bankrupt them, and that will shut down all their operations, and they'll have to fire all their employees, discontinue operations, and that will negatively impact the community that still uses their products. Part of their argument is that whether or not they were ever engaged in various capital markets violations, unregistered securities, whatever, they no longer do any of that because I guess they just do some software and hang out and promote Luna Classic now or whatever their activities are. So their bankruptcy protection means that people can't collect from them immediately. So any fine that they're told to pay will be delayed until the bankruptcy stuff is resolved. So this lets them continue to employ people, pay their salaries and pay their rent and whatever, and fund what other projects they're doing. A cynical person would say this is the staff at Terraform Labs trying to use whatever money they have left to ensure they can pay themselves for as long as possible. I don't know that they're really connected to any important infrastructure in the world. Like the government doesn't want to bankrupt utility companies. Banks don't go under because it screws up all their customers' payments. Airlines, airlines are airlines are very complicated. Yeah. But you know, people try not to shut down continuing businesses that are important for some very basic reason. I don't think you can make an argument that Terraform Labs is important in that sense.
I think most of the listeners would be surprised to know that there is still an ongoing business in that situation. I think
they said they have 60 employees still. So, I mean...
maybe all of which are... I'm sure all of them are real people. So...
Well, okay, so I will say that and associated with this, they're going to have to file all kinds of stuff with the court, and the bankruptcy court likes to have their questions answered in a specific way, and if you're evasive, the bankruptcy court has a lot of power to go after you. Actually, bankruptcy fraud, this comes up, I believe, primarily in divorce cases where people try to hide money, but the bankruptcy court is very familiar with people lying about their assets and going after them. So that it's a public service announcement to Terraform Labs not to do that, because they're very used to it, because lots of, anyway.
So, okay, a couple of things to unpack here with the Terraform Labs thing. It's interesting that you would say the prospect of a fine for stuff that you had done is such that you have to therefore go to bankruptcy protection because you expect that there's going to be a fine that you can't pay.
Yeah, I mean, if your business generates fines that exceed the value of your business, this ignores how much you've paid out historically and how long it takes to fine you. Maybe you never had a legitimate business in the first place, right? I mean, if you're a drug dealer, all of your revenues, for whatever your country's rules are and whatever the stuff's illegal, there's stuff that's illegal everywhere. Some kind of material is illegal in most of the world. If your business is selling that, your profit margin is probably very high, and the eventual fine is going to exceed your total revenues. It's supposed to work that way. Otherwise, nothing makes any sense. A lot of businesses are very profitable if you do things that are illegal. Go watch Narcos, right?
I think I would be surprised if this argument made it across the line, because I've not seen anything like that.
I've never heard of this before. So, I mean, Bittrex filed for bankruptcy after they'd been fined, before all the money was due to pay the customers back.
You see that.
That's standard procedure. Yeah,
that's pretty standard procedure.
Yeah.
Like having been hit with the fine, and then you file for bankruptcy because you just can't pay the fine.
Yeah.
Fine. Whereas preemptively declaring bankruptcy could actually sort of what do they call it? It defeats the purposes for the bank, undermine the purpose of the bankruptcy statutes.
Okay, no, fair enough.
And bankruptcy protection is there for certain specific reasons. It's not like, okay, so depending where you're from, bankruptcy provisions have different implications. So most people, I think, like a layman's understanding of bankruptcy is that once you go into bankruptcy, you get like depending what kind of Chapter 11 or Chapter 9, depending on which chapter you file in, bankruptcy is either protective or punitive. So
the U.S. doesn't really have.
Correct.
Punitive.
So that's the thing that I want to make clear, because in other jurisdictions, when you go into bankruptcy, you're not sort of like getting protection from your creditors. You're just delaying it, or you're like getting everybody to fall into like a line. So
yeah, okay. So in Europe, most famously, most bankruptcy proceedings are really liquidation proceedings. By the time you get there, it's about fairly shutting the business down.
Correct.
Whereas in the U.S., it's primarily about finding a way to
like sort of like rehabilitating the company. No. So I mean, quite famously, all the airlines after 9/11, many of them were bankrupt, and all of them.
And many times before, airlines go bankrupt.
Correct. It's a thing with airlines. I mean, it's like a lifestyle choice. So for those of you not familiar, usually in a typical bankruptcy, and not necessarily one in the U.S., you just line up all the creditors. If you have a fixed charge, or you have a secured credit, you line up first, and the shareholders all the way at the back, right at the bottom.
So you did insolvency, Singapore, right? So this is more, I guess, the Europe style one where you line everybody
like
up
the English,
and you just liquidate and go down
right.
that. Okay.
As opposed to where you say, okay, everybody freeze the debt and stuff like that. Like you don't. It's like a moratorium for a short period of time. You have some protection so that you can so the business can continue, and that's why it's called bankruptcy protection as opposed to just bankruptcy.
Okay. So
bankruptcy protection, and the idea is that you want to rehabilitate the business to try and come back, make a comeback.
Fair enough.
So to me, at least, on first blush, this Terraform Labs thing would be kind of like an abuse of that.
Okay, because they're arguing that the business they want to rehabilitate generated fines so large they couldn't pay them, so maybe they shouldn't rehabilitate the business.
It's a weird.
Okay, no, fair enough.
That's a weird legal argument to make. I mean, go land crabs, but that's. I mean, it's novel. I'll give you that.
Okay.
I'm not sure which law textbook you read that from, but they give us a call. Finally, that segues into another company that has made record profits. A lot of you guys have dropped us messages and stuff like that, asking us what we thought about Tether's record profits. How much was it? 2 point something billion?
Yeah, something like that for the
some ridiculous amount of money. And then like somebody was saying that company with less than 100 employees make more money than
lots of larger employees.
What are your thoughts about
this
that?
connects to what we just talked about. So, I mean, I think everyone will agree that there's likely some kind of a legal proceeding in Tether's future, right? I don't think anybody believes there's no legal proceeding in Tether's future, unless it just vanishes.
That'd be
And we have questions here about whether all of these profits are simply because of activities that are going to result in massive fines. So the first data point here is to recall that in the Binance settlement documents, the government stated that the statutory maximum fine for the money laundering violations was about $590 billion. Nobody pays the statutory maximums for a wide variety of reasons, also because no one can pay $590 billion. But, I mean, it's a ridiculous amount to fine them. But it is certainly conceivable that when the Tether settlement finally comes around, whatever's going on there, that you're looking at that they're threatened with a $500 billion fine, which they can't pay, which may wipe out all these profits. Per my earlier comments, go watch Narcos. A lot of businesses that don't follow the rules generate a lot of profits. Those are not profits in the sense that you normally mean them, right? So I could run an extremely profitable business doing foreign exchange stuff in Southeast Asia if I just chose not to follow any of the exchange control laws and found a way around it. Tether is running a money market fund where mysteriously no one seems to want to deposit, and they're willing to forego billions of dollars a quarter in profits. It is conceivable that this is all for the convenience of using blockchains, but it feels more likely that they're going to be fined for some fraction of that, and this money may not actually end up belonging to them, right? Running an outlaw business is usually extremely profitable. That's why people become criminals and run outlaw businesses, because they think they can, well, whatever. It's part of the game.
And that's the distinction that I want to make very clear here, that it's not like if they make this huge amount of profits, regardless, it's not stuff that you can assume will go towards the backing of their stablecoin. Because if there is a fine down the road, and the fine is of such a magnitude that, such as to, and if you read the terms of service, it's pretty clear, it could potentially undermine the value of that 1:1 peg.
Per the other comment about the fines being paid after, it feels unlikely that Tether's customers are going to get paid before the fines. Right, that doesn't feel like something that's going to happen. So assuming that this is actually accruing to the benefit of the token holders, I don't know. Now again, what's going to happen in the future with Tether, we don't know. Everyone on all sides of the issue will agree that there's a lot of risk associated with the business, and no one is going to say there's a 0% chance they get fined $30 billion. No one is going to say there's a 0% chance.
Yeah.
You may think that the fine will be small. You may think there's very little chance they get fined, but there is a chance they get fined a very large number, and these profits are associated with that risk. Comparing the business to companies that don't get fined these kinds of amounts of money is a bit ridiculous. Now, some people will say banks get fined all the time. That is absolutely true.
Yes.
That is not a excuse or a good thing or whatever it is. But I do think that the amount of fine and the size of settlement that we might be talking about here is going to be large. Remember that when the banks were much more profitable pre-2008, whatever, you're talking about individual institutions making tens of billions of dollars, and no large bank was fined enough money to bankrupt them, not even because they were being nice to them, because the fines just aren't that big most of the time. When I forget if it was BNP or SocGen was fined for that Sudan stuff. They were fined billions and billions of dollars, but it was still less than their earnings. Those are 30,000 person companies, whatever. But if you think the part of the business that was doing dodgy Sudan and Iran payments, that might have only been 40 people, right? And they were outsized profitable until they got fined. One of them got fined, I think, $7.8 billion, $780 million, whatever, huge numbers. So this is not unprecedented in finance at all, that some small team is outsized profitable for a while and then explodes horrifically. If the company is systemically important, the government may end up bailing it out. It's not an endorsement of that strategy. It's a statement that that's true. And then, fining a company the government already owns is a bit pointless.
I mean, I think that, you've seen all the headlines about how Tether has made like sort of record profits that's not something I would necessarily be very excited to trumpet. I mean, that's not something that I would want to be shouting from the mountaintops, because usually when you have a situation like that, one of the first questions is going to be asked is, how are you making these profits? And if it, as people start peeling back the onion, the thing about peeling onions is that every layer stinks.
Well, anyway, there's certainly risk associated with this money that does not really correspond to traditional sorts of these types of businesses. So we'll find out what happens in there, but it's going to be fascinating. But there's definitely an evolving theme in the space of figuring out after the final legal reckoning how much money you're going to get to keep. And this, I guess I will say I am surprised some of this stuff took as long as it did, just because some of this has been going on for a long time. But I'm not surprised it took a long time, just not a long time. And yeah, the sort of whole cycle type stuff is not that shocking. How many of these organizations will end up having to claw back money that was handed out to people? The whole FTX clawbacks thing is still kicking, right?
Yeah.
So we will see. One imagines that stuff associated with Genesis is also going to go through clawback procedures in various directions. So people are not done yet.
And finally, one last thing to note is that, and we talked about this in an earlier episode, there aren't actually that many Tether customers. I know people like to think about anybody who holds Tether as a Tether customer. That's not you're not a Tether customer just because you have it in your wallet. The number of Tether customers is actually not very big at all. So it's something to think about, and especially if the government or whoever comes in and then they get that Rolodex of who the customers are. That's, it may be fine, it may not be fine. We'll find out, and that also adds to the risks involved in that stable coin, I think, in terms of just that stable coin's backing and in the event. I mean, we've seen Terraform Labs already keel over because of.
Well, I think your biggest problem there is that if there is, when there is, there's probably going to be something, right? The price isn't going to be anywhere near 1 anymore, and an awful lot of DeFi stuff. It's not the main DeFi token, or not an outsized fraction, but it's definitely used in lots of stuff. You'll start to see things topple over that nobody expected to topple over. When USDC moves significantly away from 1, you definitely see stuff start to break, or liquidations occur because prices move in strange ways. So that stuff will.
I wonder actually if just like all the previous episodes, if we'll see stuff on the 3 pool.
Oh, the curve pools will end up 99.9% Tether if there's a massive drop, a sustained drop in the thing. Because of course they will, right?
If you were a subscriber, you'd have access to that data. But anyway, thank you for tuning in. Thank you for taking the time to listen or watch the episode. We appreciate it. Keep those comments, likes, and subscribes coming in. And then we'll see you next week. Have a great weekend. See you soon. Bye-bye.